Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, March the 24th, 2017. Thank goodness it's Friday. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We create four main hypotheses each day. Not because we're trying to hedge all our bets or say that we predicted the market properly. We create four hypos so that we have a plan in place for whatever the market throws at us. And then once the market opens, we identify what the market is doing and which plan best suits the market, and then we execute on that plan. That way we do not have to be thinking about it in the beginning. We know what we're going to do ahead of time based on what the action is. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. We do everything live here in the go-to in the pre-market, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's take a quick look at the news. We did get news out this morning. We had Canadian CPI, common CPI, medium CPI, trim CPI, all kinds of CPIs, core CPIs, and then we had core durable goods. And man, no response whatsoever. And we had core durable goods orders. So basically, we had a slight miss on core durable goods, but we had a beat on durable goods orders. 9:45, we've got flash manufacturing PMI and flash services PMI. But really, and I can't emphasize this more, today is all going to be about Trump vote on the ACA and whether or not they can get enough votes, and otherwise, Obamacare stays in place and they do not repeal and replace it with the new plan. And they're supposed to have that vote sometime this afternoon. You can see that overnight we traded basically from 23.49.75 to 40, and that was basically well within the value area of yesterday's RTH session. This market is likely to go sideways and get very choppy all day as rumors come out, as members make comments, as things get tweeted, votes gets delayed or put off. Anything can happen at any moment, and it is Friday. So my recommendation is lighten up and tighten up today, okay? And make sure you have stops in place today. Do not get behind a position, because this could be a day that it gets away from you and you can ruin your whole week and have to go into the weekend with a losing day. And we all hate that because you have to chew on it for 2 days as we wait for the market to reopen again. So each day I like to start my day with a simple candlestick chart. I use a 9 EMA, I use a 20 SMA. I had some people send me some more emails yesterday, and I'm going to make this perfectly clear. This is a paper money on toss. I used my thinkorswim platform to do options, but my execution platform is on a separate isolated computer. I use this paper money account to do my homework and to watch the indices during the course of the day. Here is the indices that I watch, the internals. So I use this, and it's real time because I've got the account funded, but I'm not trading through here. I execute through Sierra Dome for Sierra and Infinity, and for my live and options through TOS. Anyway, so I start my day with a candle. I just wanted to get that off because I got 2 emails again yesterday. Oh, you're not a real trader. I see you've got paper money. It seems to be the big thing on Twitter right now. I am a real trader. I trade real money. I just use paper money for my homework. Anyway, I use a simple candlestick chart. I use a 9 EMA and a 20 SMA on all my charts. And what I'm looking for is I'm starting on the larger time frame, and I'm working my way down to the smaller time frame to see how the strength of the trend is. Do we get good slope and separation, strong trend going, where it's being challenged or violated, and where we're getting continuation, and any candlestick patterns or chart patterns that I may recognize. On the monthly, we had a multi-year upward trend. End of 15 was challenged. Beginning of 16, it was challenged. They took it back. We had that rising 3 candlestick pattern on the monthly, and then we rallied into the end of the year and so far into the 2017. This month, our month open is 2360.75. We're currently below it. So we could see a possible first a bearish month this year if we stay below that 2360.75. But we do have slope and separation. This trend is intact. We do not even challenge the trend until we get down to the 2230, 2240 area. Going to the weekly, you can see that we've had a very strong trend up, and we had one time framing going on the weekly for the last 6 weeks, and then 2 weeks ago we violated that one time framing, which was the first sign that the trend could be changed, or we could come back and close this technical gap against the 9. And what happens is we balance out last week, okay, challenge that low again, and then fail this week and come down. Basically, we had to take back Tuesday, as we talked about in our pre-market session on Tuesday, as a possibility. And we come down and we're challenging the 9 EMA on the weekly, and I'll be watching this 2338 area very closely, because we get below that, we could see some further sell-off. And we're going to talk about critical mass, because we're currently trading below the weekly critical mass, and then we have next week kicking in where we're going to start looking at the monthly critical mass. We're nowhere near the monthly critical mass yet, but we are currently below the weekly, and we'll talk about that in a minute. Going to the daily, you can see that we had a strong trend. We had the foo bar blow off top, up to the 2401, adjusted to 2398. I don't know why TOS is telling me it's 2397.75. It's 2398. Then we had the Mr. Sneaky inside bar. We had the technical gap. We came down and closed the technical gap against the 9, came down and closed it against the 20, and then we rallied, and then we failed, and now we have the possibility of the start of a downward trend, and we're currently below the 9 and the 20. The 9 EMA retest from the bottom up would be up to the 2354. Of course, we've got that all-important area up at 2359, 2360 area, which is the microcomposite VPOC of the balance that we just fell out of. Going into the intraday, you see that we had a strong downward trend for the last couple sessions, the RTH, the Globex, the RTH, and then yesterday's Globex, we went sideways. We tried to rally in yesterday's RTH, but they took it all back and closed near the lows, and now we're below the 9 and the 20 in the Globex coming into the RTH, and we've got a possibility of a continuation pattern to the downside. On the 1 hour, we do have a bit of a downward sloping trend, but it's weakening, and we're challenging it right now. We're just above the 9, below the 20. We're coming to a decision point, likely going to chop around here this morning as we decide whether or not we get a bounce and continue back up, or fail and continue to back down. I really think it's all going to be about the vote. And if the vote passes, you're going to see a strong rally into the weekend. If it fails, you're going to see a sell-off into the weekend. Going to the 30-minute, same thing as the 1 hour. Going to the 15-minute. We're above the 9 and the 20 right now, getting a little bit of slope, no separation yet, but you can see you've got some strong buying coming in the last 15 minutes, and we're above the 9 and the 20. And then the 5, going to do this to me again today, aren't you? I don't know what's going on with this. And right now we've got basically a consolidation pattern. This is not a cup and handle because the retrace is too big. We do have a possible inverted head and shoulders, and the neckline would be basically around the 40, 45 area. Yeah, around the 45. Here's the left shoulder, the head, the right shoulder. So watch that 45 area. Just out of curiosity, let's just see what the measurement would be on it. I go to the weakest point just to be conservative, and the primary target is 47.75, and the extended target is 49.25. So just watch any breaks, and we've got a possible measured move there. Okay, let's go to the composite and look at the bigger picture structure. All right, so let's tell the story so that we've got context. We had this long consolidation period down here that centered around the 2261.75. That was the price they accepted before the breakout. We break out, we create this 3-day island top. We tried to hold value around 2286, and they can't hold. They gap down. What do? They come down and pick up the late buyers down here at the 61.50, accept price outside of value, higher at the 73. Then we gap up, come right back into the island top, accept that 86 area. Then we go into price discovery, gap up, 2-day price acceptance at 23.19, continuation 3-day price acceptance at 23.39, and then we gap up again, and we create this value area with a microcomposite at 59.50. We gap up, put the blow off top in, try to hold value up at 82.50. We can't. We come down. Where do we come down? We come back down into the 23.59 area. Test the lower side of the balance. Okay, down at the 35, and then we basically just chop around, come back up, try to get back up inside this value, reject that price up at the 82.50, try to hold. The last place we tried to hold value before falling out is the 76.25. If we get back into this value area, that's going to be your main target above the 23.59. Then we have our Take Back Tuesday. We come all the way down. Where do we come down? We come down right to where we accepted price before the next gap up at the 38 area, right to the tick. And now we're trying to hold this area around the 38 area, and we've got a 2-day microcomposite at 23.45. The 3-day microcomposite, if I move this into the trend day, is down at the 40.50 area, but it is my breakout day, so I don't put it into my my microcomposite, because I already basically know that this distribution zone centers around the CHVN of 39. But we're creating undetermined fair value here between the 45 and the 39, and we're likely today to chop around in this area as they determine what is fair value down here. The key line to keep an eye on right now is 48.50. If we get above the 48.50, then we're likely to start moving back up towards that 56.50 area. I'll show you why. And the 57 area, I'll show you why in a minute. And if we can get above that 55 area, we're back in the value of this longer time frame microcomposite. Runs from the 21st to the 20th before the breakout day, and I would be looking for a move up into the 59.25 and we're likely to chop around there if we can get back inside of that value. Below us, it's all about that 33 area, the 32 area. That's the next area we have to hold. If we don't hold that, it gets very thin on the profile down here. We're likely to slice through down to the 26 area, but the next big destination is the start of this whole gap up and move back down towards the 23.19 area. All right, so let's take a look at the overnight. As we already said, the overnight is balanced. The inventory is neutral, okay, on the overnight to net positive. We did open up at the 41, and we've held pretty much above the 41. So the inventory is neutral to net long, and if we break below the 40 and we don't hold that 39, you're going to get some overnight longs caught short in the hole, caught in the hole, I should say, and we could see some capitulation. But we have a very balanced overnight session that encompassed the whole value area of yesterday. And yesterday's profile is just ugly. I mean, if you look at this, this is just blunt ugliness where we just chopped on the news. You know, we spent so much time chopping around that 53 to 48 area, and then news came out the vote wasn't going to be held, and then we just chopped around in here and created this real ugly blunt profile. So moving things over, first of all, our daily ATR, 20-period full session ATR, average true range, is running at 1657. So off of the overnight high, our overnight high is 49.75, just one tick below the VPOC. We did not get a VPOC shift into the close yesterday, so value was held, okay, higher on the close, even with that move down. And then our overnight low is 2340, which is basically, you know, 2 ticks below the value area from yesterday, and our VPOC could shift to 44, but currently it's sitting at 43.50. It's likely to shift to 44, but I got to put it where I have it right now, 43.50, and we'll just keep an eye on it. And it's not going to make much difference because we're likely to slice through it several times on the RTH Open. And then we have an LVN here at 42.25, but it's really within the value area, and it's right just below yesterday's RTH Open at 42.50. So it's really not giving us any good, information to lean against. And then we have another one up here at 46. I'm watching the 47. That is the IB high, the midpoint, and the VWAP from yesterday. Above that, I'm looking for them to take out the overnight high and come up and take out the naked VPOC. And then the value area at 51, I'm not going to pay that much attention to the value area. What I'm going to pay attention to is this LVN here at the 52, because this is the last fractal high before we had that sell-off, and then I'll be targeting where the VPOC spent most of the time, up at the 33.75, and then of course we have the range high up here, but just above that we have the daily ATR, and more importantly we have the critical mass. So talking about the critical mass, our week open is 23.73.75. Okay, our daily ATR is 1657. So 23.73.75 less the daily ATR. We're way below the average true range of getting back to having a positive week. So likely we could see some capitulation at some point in time, because there's no way we're going to have, I shouldn't say there's no way. There's very little possibility. The only way that I would see that we could get back towards the week open and possibly get another bullish week is if that vote came early and we had enough time to pop up some 40 points. We'd have to pop up, about 30 points right now, I should say. So, and that's basically two times the daily ATR right now. So it's more likely we're going to get a bearish week. Our daily upside ATR target is also right below that 57 critical mass up here at 56.50. So I'm going to be paying attention to the range high at 56 here, because I think at that point in time they could shoot for the 50% of the significant breakout candle. That breakout candle on Tuesday, 50% retracement of that would take us up to the 59, and of course we got all that, all that balance up there, up here at the 59 and 60 area. And then the next area would be 63.50, 67.50. The FOMC number, 71 and a quarter, and then up there. And again, I don't think that's going to come into play. To the downside, there's not a lot to lean against in here. Okay, so we got a pretty wide range of basically about 10 points. Okay, between the 47 and the 38, which is our weekly downside ATR target. Our weekly ATR 20 period is 40.80, and our high of the week is 78.75. So the ATR weekly downside target is down below 38. And below 38, then we're looking for continuation and a trending week down, especially because we're below critical mass. And I'd be targeting the 35. So I am using the weekly ATR. I'll put a trade level there. It's 38 I'm keeping an eye on. And targeting the 35.50 and then the 32.75, which was that, the range low from Wednesday down here. And we have a week low down here in the 32 area, with that Globex low being down at the 32 and a quarter. Remember, 32 and a quarter is our weekly low right now. So if we get below the weekly ATR and break that 32, and I'm going to put that in there, so 32 and a quarter, just so that we know, is our weekly low. So if we get below that, then I'm targeting the 26, then the 19, the 12, and the 09.75, and come back down. We got a lot of repair work to do down here. So what is my main hypothesis? My main hypothesis is chop and more chop until the news. Okay, there's nothing else better to say. There's not a lot of guidance here. If we get above 47, look for them to shoot into the 49. We left value above us. So in essence, I'm looking for an open auction in range, wide rotations on the open, possibly come down to the 40 area, find responsive buyers, rotate us up through the 47 and come up into the 49 area, and chop around in here waiting for the news. That's my hypo 1. Everything takes us into the news. Hypo 2 is the opposite of that, an open auction in range, a push up into the 49.50 area, chop around in here, fail to break above 52.50, and then rotate down towards this 40 and come back. I really think that we're going to see some wide rotations between these two little HVNs within this distribution. We need to mature this distribution zone and complete the auction down here. And we have the 45, and we have the 39, and of course the 3-day, which is 40.50. So I expect to see chop in this area this morning and have some wild rotations on the open. My hypo 3 is a open auction in range, a move up, failure to take out that value, leave value alone, come down, break below the 38, and get a move down towards the 32 into the news. okay, as pessimism comes in that the vote's not going to happen, and then whatever happens on the news, a possible spike down into this 19 and 09 on the news if we don't get a vote. Or we don't get a positive vote. And then hypo 4 is an open auction in range and the opposite, a move up into the 50 area, chop around here, push up into the 56 and come up into the 59 area and come into the news at the 59. And then, depending on what happens on the news, a flush or a push up into possibly getting to a positive bullish week. That's the less likely of the scenarios that I'm looking at. So that's my ES. Just take a quick look at gold. Oops. Gold has stalled out, and we're chopping around this value. So far, they've not come up back into value. We've got to pay attention to this 1240 area, 1242 area. We can't hold that in the RTH. I'm looking for a move down into this 39.75 40 area and chop around there. Again, waiting on news, because depending on what happens with the news, we could get a big move late in the day on gold. So the key areas to watch are the 42s, the 48s. If we come up and we can accept this value and break above it, shooting for the 50 again. Key line in the sand above us is 53.50. Above that, we're targeting that 57 to 59 area. A break below 36, then I'm looking for a bigger move back down into this area around the 28s, 27s to the 29s. Sorry, it's a long go-to, but it's just lots to talk about with what's going on and the fact that we're going to be sitting on pins and needles waiting for this news to come out today. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.